Markets close tomorrow for Good Friday, and as we come back on the air after that opening bell, we do see that the S&P 500 is up fractionally by about 0.4%. So joining me now with more is Patrick Mueller, president at Bella Advisors. Patrick joins from Atlanta. Patrick, great to have you on the show, and still a very dynamic market environment, very headline-driven, it seems. How is this setting us up for the trading day, the final trading day, in fact, of the week?
So it's going to be interesting for sure. I think you're going to see it up and down today with all the different news that's coming out. Like you said, it's very, very headline driven right now, Kristen. And I think we're going to continue to see that throughout the course of the year. With the new administration, with the tariffs and all the tariff talks, and the tariffs are on and the tariffs are off. And with all these, over 75 different countries coming to the White House to want to renegotiate trade deals, I think we're just going to see a lot of rockiness throughout the course of the year. So everybody should buckle up.
Interesting, Patrick. And in terms of where we stand, of course, when it comes to tariffs, how are you finding and anticipating that companies will be navigating that throughout this earnings season?
It's going to be interesting. We have companies like Ford who have come out and very much pro these tariff moves, and they're taking advantage of that and having the employee pricing. And I think you're going to see a lot of American companies hopefully taking advantage of that. So, buy American, right? We just got a Ford Bronco, so we're trying to stay that course as well. But I think these tariff moves, as we see this, it's just more of leveling the playing field, because it's a little crazy to think that for us to send stuff to Europe, we get charged a 50% tariff, and we hardly charge them anything here in this country. So not very fair. So hopefully they start reducing those things down. And I think with oil prices coming down so much, I think we can start seeing prices and things starting to stabilize and hopefully even come down.
Interesting. Now, we do see the S&P 500 up about 0.3%. It is a long holiday weekend. Are there any particular headlines that you anticipate could play out over this weekend and into next week?
I think it's going to be more of the same, which is all these tariff talks and speculation about what they think is going to happen as far as the tariffs go. I think a big move that it's nice to see the market's positive today after Chairman Powell's speech yesterday, basically slow rolling the moves on lowering interest rates. So they're always a little late to the game, in my opinion, on this. But it's going to be good, long term for interest rates for seniors, for savers. Not so good if you're wanting to take a mortgage out with those things going up. But I think you're going to see more of that as far as the bond movement and what's going to happen with interest rates moving forward, moving the markets more than anything.
Yeah. Now, it is interesting because we did hear from Jerome Powell yesterday saying that he thinks the current environment could create a challenge in terms of executing the Fed's dual mandate, which is maximum employment and, of course, stable prices. How do you see that playing out?
Well, as these tariffs start rolling out and we're already starting to see jobs coming back in the country, and people or companies overseas starting to make big plants here in the U.S. So I think we're going to start seeing a lot of pro-job moves, a lot of manufacturing starting to come back to the country, and maybe that will help offset the government layoffs that are going on right now. It's always unfortunate to see anybody getting laid off. But unfortunately, things have to change, and we gotta deal with this debt that's going on. But I think that's going to be very good moving forward, and especially with the cost of oil coming down. We're not going to see this for probably 4 to 6 months. How it's going to affect everything, but transportation is going to bring the cost coming down, is going to bring the cost of everything down that we consume. So I think we just have to be looking a little bit longer term. Everybody thinks very short term these days, and we just have to think a little bit longer term for all of these things to play out. The U.S. is this huge aircraft carrier, and it takes time to turn and make moves.
Yeah. It is interesting. The House Majority Leader, Steve Scalise, did join me here at the Stock Exchange, Patrick, earlier this week and shared more about the budget, of course, that Congress is looking to pass. He said he hopes to have it on the president's desk by Memorial Day. That would pave the way for key items in the president's agenda, like tax cuts. How does that play into this market scenario?
Tax cuts are going to be huge, and I don't think that most people understand the ramifications or what's happening this year, because the current tax rates were never made permanent by Congress. So they end at the end of this year, and the rates go back to what they were back in 2017. So it's nuts, because you have somebody that makes over $300,000 a year now that pays a lower tax rate than somebody that made $80,000 a year back in 2017. So Congress has to make big moves this year in a positive way, even if they're just extending the current tax rates. And I'm always pro lower taxes for sure. So if we can tariff other countries and keep our tax rates lower, I'm definitely for that. And I think that's going to make a huge move in the markets if we get a nice tax bill passed.
It does seem as if there is a Trump put. We had seen the president step in when the market had pulled back about 20%, technically a bear market from its February high. Do you expect that to continue, and how long do you think the tough trade talk could last?
I definitely think it's going to continue, and I think it was a pretty good move. Not that it's fun to go through this whatsoever, but with Trump coming out and saying, hey, we're going to charge a 50% tariff of other countries of what they're going to be charging us, and then having that go into effect, and that swung the markets down big. And then he came back and said, okay, we're going to pause this for 90 days, but he still implemented a 10% tariff, and the markets loved it, right? But we increased our tariff so much over that period of time, and that might have been what they really wanted the whole time. So I think we're going to see more of that throughout the course of this year. We're going to see like these big moments, but I think that the administration is thinking more long term. So we're going to see these short term jerks in the markets that people just, as long as you're not retiring today, then or within the next year, you just want to make sure you don't have all your eggs on the table, right? We want to take some of those eggs off the table to make sure if we do go through a big market downturn here, that it's not affecting everything.
Patrick Mueller is the president at Bella Advisors. Patrick, thanks for joining.
Thank you so much.